Hi, Cindy.
Hi, Amber.
Thanks so much for joining me today.
Thanks for having me.
We're going to talk about divorce and lending. So I wanted to have you here because I wanted to ask you something that comes about all the time.
Okay.
With all of our divorce clients. So we get a divorce referral and then we call you and we're like, hey, we have this client, they're going through a divorce. What would be the process so they know what to expect?
Well, the first thing, Amber, what I'd have them do is to get started with the loan application. We'd want to pull credit, see what their score is, check the debt to income ratio, and get full docs. So included in that would be a divorce decree. Mm-hmm. So if they're not completely divorced, I can look at the preliminary documents.
So temporary orders will suffice?
Well, we actually would need a divorce decree. It might not be signed by the judge or signed by both parties, mm-hmm. but we want to see what the division of assets, so if there's any houses involved, any bank accounts, any debts.
Who's getting what? Like there's a $10,000 credit card bill and who's going to get that? So you know how to calculate their debt to income.
Correct.
Okay.
And also child support. So who's paying and who's receiving and the dollar amount. So what we look for with the child support, or at least I educate the consumers that they have to have 6-month history and then a 3-year continuance for me to include that as qualifying income. And I can use the gross amount. So if you're getting $2,000 a month, then I can include $2,000 a month as long as you've consistently received it for 6 months and it's documented and verifiable.
Yes.
And that the children are going to be either you've got 3 years until they turn 18 or graduate from high school. So that's very important. We
covered this in another video, Scotty and I did too. And, it doesn't have to be going through the Texas OAG. It can just be like a check that was written that you have copies that he signed over to you.
Okay, yeah. And
that was my situation.
Okay. Yeah, so it is important, at least to get started, so you know what to expect and how long it's going to take to either refinance or pull the equity out, which I kind of recommend at this point. If there's equity, which everybody has equity, right?
Especially now.
Everybody has equity. So definitely recommend, in a divorce situation, to get those debts paid off. Like when you're refinancing to get the outspouse off of the title, pay off your debts. Be free and clean and start fresh, because there's no better time than now to get that while interest rates are still low, near historic low, and to pay off the debt so you can start your new beginnings with less debt.
That's right, new beginnings. So I have a question. So they're employed, say you have someone, and you need bank statements. How does it work when the bank statements are in both of their names? Is that an issue?
That's a great question. So when we are originating a loan, and there is a joint account, and we're using those funds to either buy a house for down payment or closing costs, and it's joint account, we need to get a letter from whoever the joint person is on the account that they are authorizing full use of the funds. So it doesn't have to be removed, but a letter will be required, them signing, and that will be in the file. So
super good information.
Yeah.
I learned something new. Okay, so how does that work when you have a credit card and it's in one person's name but the other person's a signer, and they're saying you're just going by the order of the decree that, hey, this has been awarded to this person or that person?
Well, as long as it's stated in the divorce decree that's signed and executed and filed with the county, and it's the outspouse's debt or the other person's debt, we can remove it from the application, from your loan application. We do a credit supplement because technically it's not your debt.
Cool. What about DTI? That would be debt to income ratio.
You want to do financing with me?
No, that's you and Scotty. I'm not the numbers gal. But so I know that's really important. What is the ranges? Or does it differentiate per client? Or
debt to income ratio will definitely depend. It depends on the loan program, and it depends on a lot of things. So it's a very gray area. It's not a specific number because, of course, you can have reserves that will get you a higher debt to income ratio. Like, for example, conventional loan, if your debt to income is over 45%, if you can go over 45% if you have 6 months reserves in an account. Reserves means your savings accounts. You have to have funds in a savings account at closing. But typically it'll vary from FHA, VA to conventional. All the programs have different. So it's very gray.
Okay. Well, that's okay. I just wanted to get some clarification. So I have one more question. Well, actually I have two more.
Okay.
So the next question is, how do you or can you use Quadro money? So you had a 401k, your ex-spouse gave you money in this 401k that goes into an account for you. Can you use that money as well for down payment?
If it's legally yours, you can use funds from a retirement account, whether it's an IRA or 401k. So you can either borrow, well, you need to withdraw. If it's not with your current employer, then you're going to need to make a withdrawal.
So note to everyone who has received 401k money from your spouse via what's called a qualified domestic relations order, it is set up an account for you in your name without the 10% penalty fee. And she's saying you can withdraw that. So you still have to pay taxes on that money because it's considered income. But you can use that to purchase a home, whether you're doing it, post-divorce a year or however long.
And of course, one thing I do like to say is that you have to get the terms and agreement, because really it's all dependent on that. We can use funds from a retirement account that's yours that you can make a withdrawal from. However, it depends on what the terms and agreement of that account says. So some accounts will limit the amount you can withdraw, so you can't just withdraw.
So from the plan administrator.
That's correct.
So also note too, Quadros take anywhere from 4 to 6 weeks. Closer on the 6 weeks. So if you're planning on using those funds, you need to make sure you have it in time for when you're going to be closing.
Yep.
Last question I have, I promise this is it. So I want to know for our clients, what's the difference between using their local bank or using a mortgage lender? Because we hear this all the time and we think banks are great, but tell us why.
Yeah, that's a great question. I actually get that all the time as well. So banks are depository institutions who do mortgages. We are mortgage brokers where all we do is mortgages. So we are the industry specialists and
experts.
That's right. Yes. So there's many differences. I'm going to say with a mortgage broker like myself, definitely technology is a huge difference between us and a bank. So our technology is faster, it's more current, and it's easier to get qualified. We have less restrictions than the banks. We have more personalized service, so we are available nights and weekends. We actually pick up the phone and we call.
That's what I love. I can call you or text you on a Sunday and be like, what is up with this?
Right. And you think, oh, she's doing nothing but waiting for me.
They're waiting for you.
Yeah. I mean, service is huge. And, to consumers, it's, they don't really think about it until they start going through the process, because let's face it, buying a home is stressful. It's a big change in your life. Absolutely.
Especially when you're dealing with divorce.
That's right. So the mortgage process with a broker is geared towards making it easier and less stressful for you. So what we do to do that is we get your documents, all the documents up front, and we review them. We actually look at the documents. We don't just collect them and let somebody else, the underwriter, figure it out. We do all that up front and get that buttoned up for you, so there's no surprises or very minimal surprises. And it's less risk for you as the consumer and less risk as the realtor. So if you don't want to lose your money, you don't want to lose option money, earnest money, appraisal, inspection fee.
And in my situation, I had not been working. I was a stay-at-home mom, and so I was able to have a mortgage broker shop a deal for me. So I went on a back-to-work program that allowed me to get approved. I'm not sure that a credit union can do that.
That's an excellent point, Amber. So for sure. So because I am a mortgage broker, I can shop lenders. I have about 40 plus lenders. We add lenders every week. So what those lenders do, each one has a different specialty loan product. So
Awesome.
if I can't get one qualified through this lender, I can go to another lender.
And it doesn't matter, like if you're switching one to the other, doesn't affect credit, right?
No, because we run credit one time and one time only. So I do the
Fabulous.
shopping for you. You fill out an application, credit's pulled, documents are reviewed, and then I do the shopping. I shop the interest rate as well with those 40 lenders to get you the best market rate available. Our fees are lower than other financial institutions, and that means with lower fees, it means you have more money to buy.
More money.
Yes, more money. More money to buy a bigger house and to have a lower monthly payment. So you definitely benefit from
Awesome.
all those.
Well, thanks so much for being here and telling everybody about the process. And I know we're talking about, in normal buying, but in divorce too. So you kind of know. If you're in question at all about who keeps the house, that's another video that you can find, or you can go to www.thegiffordgroup.net and we have blogs on there, or you can give us a shout out and we'll be happy to have that conversation with you. So thanks again for coming.
Okay, thanks. It was fun. Thanks, Amber.
As always, we're here to bring you real life experiences to all your real estate needs. Thanks. Except I bumped the table really bad. And I was trying to say halt for a minute, but then you came in and got her, so you might have to just slice it. Oh, yeah. And then I'll do... Well, you need to be in it too. Can you do an arm one? We'll do us first. And